in partnership with CommSec.
Okay, joining us from CommSec is Mr Piotrowski. Good morning to you, Tom. So we've had some green in the equities market, but also oil is on that tear again. What's going on?
Good observations, Kenny. Yes, we've got the stock markets up quite substantially in late US trade this morning. We've got improvements in the order of about 1.8% for the Dow Jones and the S&P 500, and the Nasdaq is up by 2.5%. So they are quite substantial improvements. They're quite a departure from some of the malaise that we have seen for equity markets over the course of the last couple of weeks as investors concern themselves with the plight of rising US interest rates, long-term interest rates in particular. So these gains this day come at the hands of some rather encouraging inflation numbers. So there's quite a few figures that you can focus on where these reports are concerned, but arguably the most important numbers are the core figures, Kenny. These are the numbers that the central bank looks at carefully when they're deliberating. And the core measure of US inflation, the underlying pace of price growth, fell over the course of the last month from 3.3% to 3.2%. So not much of a move, but it's quite symbolic, and it's the first fall that we have seen in underlying inflation for about 6 months. That's important in the context of this interest rate environment that we've got on our hands at the moment. At the margins, it does give the US central bank the opportunity to at least entertain further rate cuts, but what it did was create quite a bit of downward pressure on long-term interest rates in particular. They've been marching higher for the last couple of weeks. A 10-year government bond was down by 13 basis points to 466. Just that move lower in itself is symbolic of the relief that the market has expressed following these numbers. That's translated to gains across the market. Bank stocks had a tremendous night last night because of better than expected earnings. Technology stocks were dealt a reprieve because of the fall in interest rates. So that all ladders up to an encouraging start to the local market today. The futures are pointing to an improvement of around 1.5%. And we've got the marquee event of the week coming around the bend this morning with the employment report for the month of December, Kenny. So we can talk about that next time, but that will be an important feature of whether or not the initial improvements that we see for the local market are sustained over the course of the day.
Nice one, Tom. We'll talk to you soon. Thank you.